Hello, everyone. My name is Chad Hart. I'm an extension economist with Iowa State University. And today I'd like to give you a brief update on what we're seeing in the markets as we get in here to the middle of March and begin to think about planting as we look forward. And USDA has provided an update on not only what they see for us when they're looking at the crops we have in the bin that we harvested back in 2024, but they're also giving us what they're seeing as we look out for planting in 2025. And so they did update both those sets of numbers, and we'll go through those today. Now, as we're looking at U.S. corn supply and use here, what they basically have found for the 2024 crop is that supply and demand remains very consistent with what they've seen over the past couple of months. As we look here, 2024 was the best yielding crop the U.S. had ever seen at 179.3 bushels per acre. That led to a really strong crop, but not quite the record crop that we were bracing ourselves for. And what that allowed is that allowed usage to catch up to our production there. And that has buoyed the corn markets a bit over the past few months. As you look down at the gray box where usage is at, you can see that overall usage is up over 15 billion bushels at 15.115 billion. So that's a record amount of usage that we've got going on. So we are seeing plenty of corn being utilized, not only here within the country, but as we look especially to our export markets, because that's where we have seen the growth in usage over the past 6 months. The big question is continuing that as we look forward. Because of that growth in usage, we have seen ending stocks fall. They're now down to 1.54 billion bushels, but we have yet to really see, in this case, USDA raise their season average price for a while. They've been holding at $4.35 a bushel now for the past couple of months. And I'd say the concern looking forward in 2025 is that while corn prices aren't necessarily all that strong individually, they do look strong relative to the other crops that are normally planted in the spring. And so as USDA looks forward to 2025, they do see more corn being planted. In fact, going back up to 94 million acres. So, in a sense, we're sort of returning back to what we did in 2023. That's going to happen for soybeans here as well. Now, you put a trend line yield with those 94 million acres, and what you've got is the potential for the 2025 crop to be a record crop. Right now, the estimates would weigh in at 15.585 billion bushels. So, incredible amount of production. In fact, over 200 million more bushels than our previous record, which was set in 2023. So as we shift down to the usage box again, you can see that USDA does show some growth there, mainly from feed and residual as we look there. But most of that is probably residual growth as the feed market continues to, let's call it oscillate, because we know that the cattle herd continues to shrink. The pork herd has been growing, and broilers, poultry, trying to grow, but dealing with the fallout of avian influenza. And so feed demand is likely flat. It's residual usage that's likely going up, and that usually is translated into harvest loss. And with a big crop like we're projecting in 2025, that means big harvest losses are projected as well. As we look at ethanol, food seed, and other demand, which is corn sweetener demand, and even on the export side, USDA shows a little flattening there. And the one thing I should mention here is that as we're looking at these projections from USDA today, most of these were made before many of the tariffs that have been announced have been put in place. And when USDA is making projections, they have to use what is current policy on that date, which means most of these projections do not include the tariffs that are coming down the line. And so, yes, tariffs will continue to shift these numbers and likely move those export numbers downward over time as we progress, if all of those tariffs come into place and other countries retaliate as we would expect. So as we look here for 2025, what USDA is showing is even before the tariffs are hitting, we're seeing the possibility of production again exceeding usage, stocks building back up close to that 2 billion bushel line that has been a concern for the markets, and that means continued downward pressure on prices. Now, as we look at the soybean market, as I mentioned there, what you're seeing If I can get it there. There we go. With the soybean market, again, it's sort of a replay moving back to 2023 when it comes to what we're going to see for acreage for 2025. When we look at a 2024 crop, again, a very large crop, not quite a record crop in any sense, but very good yields, very good production, weighing in at nearly 4.4 billion bushels. And like with corn, we are seeing usage grow as we move through the 2024 or marketing season. And a lot of that growth, again, is in the export markets. Now, the challenge here has been but the soybean market has been working its way downward really strongly these past couple of years. In fact, as USDA updated these numbers this past month, they ended up lowering that season average price for 2024 down once again by 15 cents. So now we are south of $10 a bushel when it comes to that season average price. That definitely weighs on planting intentions, and that's why when we look forward into 2025, soybean acreage goes down to 84 million acres, again, very close to what it was in 2023. But if we put a trend line yield with that, even with the reduction in acreage, that may not translate into a reduction in soybean production. In fact, as you look at the number there, it's basically the same as what we produced this past fall. So again, we'll have plenty of crop to work with. With soybeans, we do have some growth still happening with domestic soybean crush as we have added these crushing facilities throughout the countryside. That is pulling more and more beans through there, mainly to help support the surge that we've seen in renewable diesel. But USDA also sees that growth slowing down. As you can see here, they are only showing about 65 million more bushels moving through our domestic crush in 2025. And so again, the linchpin may be the exports again. Now, in this case, USDA made the projection again before most of the tariffs had been put in place. So they were still optimistic that we could see some growth there, but that growth is likely shrinking each and every day. And with production and usage in relative balance here, based upon where the numbers are at right now, USDA is holding those soybean prices down at that $10 range as they look forward in 2025. Now, in terms of global production, what we have seen there is that, again, we're dealing with plenty of supplies, not only here in the US, but worldwide. As we look at the 2024 crop worldwide, it is a bit smaller than the previous crop, but that's mainly because the US crop was a bit smaller. And when we look at the rest of the globe, they produce just about as much corn as they did in 2023, which means we are seeing more competition. And as you can see here, the main surge in that growth has been in two areas, from Brazil and from China. In the case of China, they will just likely utilize more of their own domestic corn for their own needs, but you can definitely know that Brazilian corn is competing with us in the export markets. But I also want to point out that we are seeing our export sales grow, and that's because some of our other competitors have fallen off a bit, especially as we look at the Black Sea region, Ukraine, southern Russia. There's not as much crop production there because of the war, and that has opened up some opportunities for us. Now, when you're looking at soybeans, it was a record in 2023. It's a record again in 2024. In fact, we continue to see sizable growth in soybean production worldwide. Luckily, in this case, though, soybean usage around the globe continues to grow almost as quickly. But when you look at where that growth again is sort of centered, Brazil is capturing the lion's share. We're up somewhat, and everybody else is sort of treading water as you look out there. So within the soybean market worldwide, it really is the US and Brazil competing for those export markets. And so far this year, we have been able to gain a little bit back when it comes to soybean exports. In fact, let me show you that data now. When we're looking at year over year sales for US soybeans, they are up nearly 14%. And you can see we're getting some of that growth from Europe. We're getting some from North Africa. And I'll point out to the, what's labeled here as other. It's small markets across the globe where we've seen us pick up sales. We continue to lose some sales in China that are headed to Brazil. We've also seen a little bit of back off from Mexico and Japan recently, but it's relatively small amounts. But the idea is overall, we seem to be fairly competitive worldwide when it comes to soybeans right now. And that's why the tariffs sort of loom large here, and that's going to increase the cost of us reaching those global markets and will likely slow down these sales in the future. It's actually maybe even a bigger concern for the corn market because of how much growth we've seen over the past 6 months there. So you can see we're up 25% year over year. And you can see that growth is coming from many places across the globe. Whether we look at Latin America with Mexico and Colombia, whether we're looking at Asia with Japan and South Korea, and even into the European Union, we are seeing more corn opportunities right now, and we've been able to fulfill those opportunities with the supplies that we have. And so that's why the markets have been so sensitive to whenever tariffs have been mentioned in the marketplace. In fact, as you look at the way prices have moved over the past couple of weeks, you can definitely see the strong negative, the downturn that the corn market has went through. And it was a combination of the idea of 94 million acres coming to be planted this spring, combined with the additional tariffs coming on now that is weighing down significantly on corn prices, where soybeans haven't moved as much, mainly because acreage is moving away from there already, and we haven't seen as much targeting of soybeans yet when it comes to the possibility of retaliatory tariffs. But it is still the case as we sit here in the middle of March, where corn prices still remain a relatively, let's call it, good standing relative to soybeans. And so it is expected that we will continue to see more corn planted in 2025, less soybeans planted there, with corn right now offering a pricing opportunity that beans just can't quite capture. That said, I will still look towards, as we look out towards later this spring, early summer, we will likely see some pricing opportunities for both crops, especially if we do get some sort of weather premium as the drought continues to remain a problem across the US. And the other thing I'll be watching for here is that if we do get enough acreage shifted away from soybeans, as we get into the fall, you could see those soybean prices rally because global demand, again, remains fairly robust, and that should help pull those prices up, especially if global markets are reacting to a smaller U.S. soybean crop. Well, with that, I want to thank you for your time and patience. Again, my name is Chad Hart. I'm an extension economist for Iowa State University. Thank you for your time.